I mean, I think the market's view is that, yes, we know that the tax hikes will come. It's been talked about in the last few months. But in any case, upon implementation, the tax hikes are likely to be a watered-down version from where they are right now. It may not be a full version of what it is right now. If it is a full version, we estimate that perhaps it would actually take away about 7% of the earnings from the S&P 500. But if it's a watered-down version, it could go anywhere between 2 to 3%, which may not be a huge material impact, given the fact that the US economy is really growing very strongly this year. And we actually expect a pretty strong increase in earnings growth this year, in about 37% in any case. So taking away about 3 to 4% is not going to hurt the markets that badly.
Right. You spoke about, the equation between the US and China. I wonder, going forward, if he's talking about the environment being even more competitive, what does that mean for the China watchers and the kind of reaction we would see from an economic policy standpoint in response to this from China? Because if you look at the trade deficit, that one is still expanding. I mean, China is still ruling the roost with a trade surplus against the US.
Well, at this point in time, you can't really reverse that because of the fact that this recession last year was largely on services, which is basically 90% of the US economy, and not on manufacturing. Manufacturing is the mainstay of the Chinese economy at this point in time. And therefore, with the recession focusing largely on the services industry, it was a no-gamer, right? It was a no-brainer that Chinese manufacturing would therefore contribute dramatically to its trade surplus. And that's not something that you can actually reverse, because if the US economy continues to recover at the rate that they're recovering at this point in time, and given the fact that they import almost everything that they consume, then largely the trade surplus with not just China, but with all the rest of the world will continue to increase. And that was something that we've seen in the past recoveries as well. It's not something that you can actually reverse. But going forward, I think the point is that the new competition will largely be in the green economy, in the services, in the automation, robotics, and artificial intelligence sectors, in basically the fourth industrial revolution. And if that's the case, if you have two of the world's biggest economies actually moving in that direction, that basically means that there'll be a lot more jobs created in those sectors, and countries which focus on servicing those sectors will actually benefit from that.